Welcome to the Best of US's Two Regular Guys show. This is Mark over here, and I'm Trent. And today we're going to get into, inflation, maybe some projections on what the Fed's going to do next, talk about housing, and, a lot of stuff that we as citizens of the United States are worried about. So let's get going. All
So
right.
I did wear my patriotic red, white, and blue Pabst Blue Ribbon trucker hat, and you
There
can't
you
get
go.
much more regular guy than that for the 4th of July. So, um, with my
That
Yankees poster back here, so
Man, you are bleeding the
I'm
red,
very
white, and blue today.
I'm very festive this time of year. So, hopefully everyone has a good holiday weekend. Probably a lot of people are taking the whole weekend off starting tomorrow. The market tomorrow is where we filming today is Wednesday. The market's only open half a day on Wednesday, the day before Thanksgiving, or not Thanksgiving. Holy crap, I'm way ahead of myself.
Yeah, please
Before the
not that
4th of
far.
July, and then 4th of July is Thursday. The market's closed, and it opens up Friday. And this week, I've even said in the Platinum channel, I'm not even swing trading this week. It's not even worth, opening the doors for me because the volume's going to be low. A lot of people are gone. You're just not in the right market, and I'm not gonna risk capital this week based on start and 2 days later you got a day and a half off, and then you start Friday, and then you got the weekend. I'm just
Yeah.
not going to risk capital, so it's been pretty easy. And this week, and we'll start up again next week. But the paper trade portfolios well ahead of schedule as far as making money, and that's I'm happy with that. Take the week and just talk to people on our new live channel on the
Yes.
Discord.
Yes, the new Discord Live. So as of yesterday, the 1st of July, we have one platform, and that is the Platinum channel. For those who were part of the premium are still part of the premium. We're still servicing that, but everything's gone to the Platinum channel. And one of the new features of the Platinum channel is the Discord live chat. This is like a Zoom call that members can log in and talk about markets, talk about economy, talk about all that kind of stuff. And so we went live with that with a suggestion from David on Friday, and literally just started it up right then during the platinum call on Friday, which is at 11:30 Central, and part of your membership as a platinum member. And we've had a lot of people jumping in on it, and I know I was on it yesterday with you and a handful of the guys, and it was a great discussion. It was just talking and talk about markets and stocks and swing trading and that kind of thing, but also bigger picture stuff too. That's
Yeah,
cool.
yeah, it's going to be a nice feature for our members, and uh, at any time you can hop in there 24/7. So it's nice.
Yeah. And I think as it develops, as news items come out, we can have that discussion. People will get more organized with it, jump in and have discussions before markets open and that kind of
Yep,
thing. And it's just a, impromptu kind of event, but also I think creates a better community amongst the people who are subscribers. Yeah.
definitely.
Fun.
Well, just because I'm not trading this week. Our members are trading. We have, people have different risk tolerances and different appetites to get into the market, and it's good to get in there and listen to what they're talking about, and
Yeah.
seeing that they're making money. I was in it this morning, and a couple of our members are into Tesla, and they were very happy today as Tesla's up 12% or whatever it is,
Yeah.
especially after yesterday's rise. So they're doing pretty well over there in the Discord and in their Tesla and in other stocks they're in.
Yeah. It's cool.
So
Very neat.
anyway, let's talk about. I just saw an article, and it said that this year's 4th of July cookout is going to cost you about 6% more than it did last year. And I'm just assuming it's hot dogs, hamburgers, chips and pork and beans and stuff that normal people have, and regular guys like us have, maybe a
Right.
beer or two, margarita,
Two?
potentially down in your area.
Yeah.
Uh,
Way
so,
too many.
that's about it. That's when you think of that, that's a 6% annual inflation rate. That last year, and so we look at this at what we're seeing in from the Fed and from the talking heads, and then Powell came out yesterday, or no, this morning, he said inflation now shows signs of resuming its disinflationary trend, and a lot of progress has been made on inflation, and policymakers would like to see more data like what they have seen recently. So you take one little data point where maybe the PCE either was flat or dropped by 0.1%, and that's really great. Okay, and so you look at the PCE, okay, and that's really more about consumption, personal savings, and then you look at the CPI. As you know, now we have like countdown clocks when these new CC CPI, PPI, PCE, the countdown clocks, and everyone's there, and
Right.
everyone gets excited. And Steve Leisman gets on, and he puts his glasses on his head, and he looks for the best information he can find. But really, the CPI doesn't really tell the true story of inflation. CPI stands for Consumer Price Index, and it's an economic indicator that measures the average changes in prices paid by consumers, and mostly urban consumers. Okay, so people like me in rural areas, I guess we're not counted.
Mm.
Okay, even though I don't get my chocolate donuts anymore because of inflation.
Right.
Okay, they have a basket of consumer goods and services over time, and they just kind of compare them. But if you go back over time in the CPI, you can see how they've adjusted different things and taking things out. So the core CPI takes out food, okay, because we don't need food,
Right.
and energy because we don't need energy, okay. And
Yep.
so that is the basis of, wow, look at, the inflation is coming down. We're at 3.8% CPI or whatever, okay. And it's so, inflation is down. Well, inflation is not down, as you know, Trent. Inflation is just not rising as much as it has, okay,
Right.
but it's still there, okay. But if you look at CPI, it excludes a lot of stuff that you and I and every other regular person that watches this, they use, okay. So it excludes interest rate increases on everything, taxes, like your property tax, it excludes that, taxes on your automobile, taxes on things you buy, housing, health insurance, okay, homeowners insurance, okay. Who didn't have a homeowners insurance raise? I think you were looking yesterday to lock in before the big hurricane hits down
Yeah,
there,
I
right?
did. And
How'd that go?
good. I ended up saving $1,000 a year, yet I had to increase my hurricane deductible by 300 basis points. So I took it from 2 to 5%. And it was literally a cost, management. And as I was talking with somebody, what's the probability of me getting hit? And I'm like, okay, can I make, and that hurricane deductible is based on the overall insured amount. So it's a chunk of money. And maybe I'm playing a little game of roulette here, especially with a hurricane down there in the Caribbean right now that's growing. Um,
Cat 5.
yeah.
Yeah,
So, those are things I think the consumer, especially in Florida, has to take into account. But your state, and it's a state that I don't think a lot of people recognize the, I hate to use the word danger, but the insurance danger that you guys run into, and that's in Nebraska.
yeah,
And I've
yeah,
it's become more and more evident to me when I'm on the call with you and your phone starts igniting a tornado warning, and I'm like, what?
right.
Yeah. And that's
We
been
had,
big
we
in your state this year.
Yeah, we had one last night at 11:39, and a big storm came through yesterday morning. A storm came through, and then last night a big storm. We probably got 3.5 inches of rain. So we're in the same boat because insurance company looks, when a hailstorm comes through here, which is more prevalent than tornadoes,
Hmm.
it hits people's houses, and everyone needs a new roof, they need new gutters, new siding, and they finally looked at that and said, well, heck with that. So like my insurance, they tried to double it up this year, but luckily I have a pretty good agent and went and found, lower rate. But not only do I pay for my damages, I'm paying for your damages too, just like you're paying for my damages up here. So they're
Oh yeah.
pooling it all together and raising rates. And then even in your state, I think they're canceling policies.
Oh
You
yeah.
don't can't even get insurance. So you were telling me yesterday you had to lock in your insurance on your own before that thing hit the Gulf of Mexico, right?
Yeah. So the way it was explained to me by my agent was that if a hurricane enters the Gulf of Mexico officially, or a tropical storm or a tropical depression officially gets a name or a number, the insurance companies will not lock in. And so yesterday at 8 in the morning, I called up and locked it in. And so I'm good there. It became effective immediately, which is nice. But it's one of those things that I think at the average household in this country, seeing these escalating numbers go up, and it's not just homeowners insurance, it's car insurance, it's
Oh
health
yeah, that's
insurance.
next. Yep,
It,
health insurance.
you get people are getting hammered and it's
Yeah.
squeezing them.
Well, and then you think of other things that CPI doesn't count in as shrinkflation. Okay, have you opened a bag of chips lately? Or have, one of my favorites is Hostess cupcakes. Now, a Hostess cupcake used to be like this, and now it's like a little
Yeah.
donut,
Oh yeah.
So shrinkflation, okay, that doesn't count in. You talk about additional service fees that you get. I just booked some flights to come down to your area, and I'm looking, here's a government fee, here's a security fee, here's this fee, that fee. It's another $100 on top of my ticket,
Yeah.
and I'm like, what the heck? And that's
Yeah.
not in there. Okay, a new service or a convenience fee is not in there. Okay, or charging processing. Have you seen have you been to a restaurant lately that says, hey, if you use a credit card, you're going to pay for that percentage?
Yeah, you get
Okay.
two
Well,
prices.
there's an extra 2%, 3% you're paying there.
Yeah.
Okay. So when they come out and say, oh yeah, inflation's coming down, does it really come down for the regular people like you and me? And I would say no. So I wanted to show you just a few things, and I'll share my screen here. So this is just the consumer price index for May, okay? And you see it come out, the consumer price index for all consumer was unchanged in May. Woohoo! Seasonally adjusted basis after rising 0.3% in April. So that's where all the, Powell was talking yesterday. We like what we're seeing. It's going down, but is it really going down? So let's take a look. So here's the chart that you get, every month, and you can see here's all items. I'm just going to do all items. You can see food too. So November 2023, okay, up
Hmm.
0.2%, December 0.2, 0.3, January 0.4. These are up, okay. Adjusted change in preceding month. So 0.4 up from the preceding month, 0.4, 0.3 May. Here's where we went, even. But 12 months adjusted, we're at 3.3%. They're like, oh, that's pretty cool, 3.3%. That's not bad. Why are you guys complaining about prices? Inflation's coming down. Here's energy or food away from home, 4%, energy 3.7, food 3.3, or food 3.3, 2.1, I mean. So you can see, this is how they count it. Let's go take a look at a few other things here.
But they don't
Okay.
include that, right?
Yeah,
The
well,
the food and energy.
the food and energy is not in the core. Okay. So let me come down and I'm going to show you something else here. So here is a chart, which we love charts on this channel. So this is the CPI inflation since 2019. Okay. This is from the US Bureau of Labor Statistics. So 2019, okay,
Uh-huh.
which we want to go, and you see where we are today. You can see it right about January 2021, we started this rise. This is
Hmm.
all items, and all items were up from January of 2019 to today, 25%, okay, in inflation. All items, according to the Bureau of Labor Statistics.
So this
So
is the
again,
true CPI.
this is what you're seeing, you know. Okay, we're at 20, let's just say this is of May, 24.77%. So next month we see a 0.2% increase. It's still increasing on top of that 27%. Okay,
Right.
over time. So,
Right.
it might be less than the month before, but here we are. So let's just go in, and I found a nice little site. Okay, and and we can go back and actually look at different prices of things. Let's just look at things that people might use daily and need. Okay, how many people out there might have babies and you have to have baby food? Okay, so we went back and we went from 2020 in this particular one to 2024, and it calculates out your inflation. And according to the U.S. Bureau of Labor Statistics, if you have a baby and you're buying baby food, it's almost 30% higher in 2024 than it was 2022. Okay, so the annualized inflation rate, yearly inflation rate, so year over year, every year, it's going up 6.62%. Okay, so okay, is that calculated in the CPI? I don't know. We're at 3.3% of the CPI. Isn't that great? Let's go look at something else, that you might use. Okay, well, how about anyone use electricity? Okay, let's go look at electricity. Let's see how
No,
this
I
works.
disconnected it.
Yeah.
Overrated.
So here we are. This is when I started in 2019 to 2024. Okay, almost 30% higher, electricity, or 5.37% every year, your rate of inflation. Okay, here we are, CPI, 3.3%. Are you back? I don't understand why you people are complaining about prices. CPI is 3.3. The PCE was flat. Okay, why are you guys complaining about this? All right, let's go take a look at some other non-essential things we might need. Uh, does anyone eat food? Okay. Anyone eat food? So we'll put this up so we can see this. Trent, you ate food last night? You said a bunch of
I
it.
did. I'm a
So
gluttonous.
food prices from 2019 to 2022 up 27.05% higher. Okay. So 4.9% per year inflation. Okay, since 2019. All right. So again, why are you guys complaining about any kind of inflation? Let's look at something that. How about gas? Does anyone use gas out there? Gasoline? Okay.
I ride my
What do you
bike
think
everywhere,
this one?
Mark.
Well, there you go. I can't where I live.
I'm coming to
Okay.
visit you.
Well,
It'll be a month.
yeah. See, gas only went up 30.5%. Okay, or 5.47% per year. But remember, inflation, we're in disinflation, and inflation has been being reduced, and interest rates will come down because look, inflation's coming down. But is it really? Is it really? Do you go to the store? Do you go get gas and say, hey, I got more money in my pocket these days? How
No.
about let's go look at what else? What else can we look at here? How about haircuts? Now I know you probably don't
Haircuts?
get a haircut. This is it's probably what you don't use here. Okay.
Probably not.
Yeah,
Does
so you're good on this one, but let me take a look for normal average guys. Okay. Haircuts went up 25%. Okay. And that's an average of 4.6% per year. Okay, just to cut your hair. Okay, you go in there, and I'm like you, I might have something to cut off the side. $25 or 30 now.
yeah.
It takes 10 minutes. So anyway, I don't know
Yeah,
what you guys are complaining
I guess
about.
so
Inflation.
let's use the haircut example. So if my haircuts go up an average of say 4.5% a year, okay. When they talk about the dollar being devalued, and that I think is at around 7%, it's you're losing 7 cents per dollar buying power each year.
Mm-hmm.
So you couple that with the cost of my haircut going up. Am I right in thinking this? And that is true inflation on haircuts. Am I right in saying that?
Well, yeah, your purchasing power is down and your prices are going up too. Yeah.
So so they're not set, they're not, one thing. It is one loses value in buying power, the other costs more in to buy. You add those together, and that's truly what I would say inflation is.
Yeah.
Am I could
Yeah. No, you're right. I mean, and that's why, we've talked about Bitcoin before and how that's a store of value and how people see that as a way to hedge against purchasing power, loss of purchasing power, and also a loss against inflation since Bitcoin is seen as non-inflationary because there's only 21 million. You cannot inflate it by having more Bitcoin made,
right.
like you can with the US dollar or any fiat currency.
Yeah. And
So you're
so
right.
at this rate that I mean, you've what you just showed there, every one of those items is going up in inflated costs by at least 4%
Oh,
plus.
over 4%. Yeah.
Yeah.
Year over
So
year. Yeah.
as you plan out for your budgeting for the future, especially those who are retirees, truly what they should be considering in how they calculate it is that devaluation of their buying power, but also the increase of inflating of the costs that they have to have, food, transportation, haircuts, and whatever. So when they calculate their retirement projections, most people calculate it based on what, 3.3%, 4%?
Well, I think I don't know what Social Security does, but they have a cost of living adjustment, but I don't think they get more than 2% on any,
Right.
raise every month, every year,
So if
what we're seeing here. So if
so
you're
if
on a fixed income,
yeah, you're really losing ground.
welcome to your life, of inflation is a huge tax on people who are on fixed income.
Yeah. So I guess then how do you rectify this massive, from 2019 to 20, 24 increase in cost of 20+% on pretty much every item you buy and use? How do you fix that? How do you reset that? You
Well, I
raise,
think I don't know. Well, you can raise taxes, but as long as they continue to spend more, they being the government, then they're bringing in. You can raise taxes till the cows come home. You're never. I think we need to look at reducing spending. Okay, we have spending. We look at the money we're spending, whether you agree with it or not, in Ukraine. Okay. Look at the money we spend on scientific studies on the mating habits of praying mantises. Okay, and all those things. Senator Tom Cotton from Oklahoma, would come out every year on the top 100 wasteful things that government does, and it's just amazing if you go through it.
yeah,
And when you hear politicians talk about the economy, they're always talking about raising taxes. We need more revenue, but I never hear them talk about the Department of Energy, the Department of Interior needs to start cutting. Like a
mhm,
company would be, like you and I.
yeah,
Okay, if our companies, if I run a restaurant, okay, and I see that my revenues are down 20% because the economy is keeping people from coming in, because I had to raise prices because I have to pay my employees more and all my ingredients cost more. The insurance on my building costs more. That passes through. And I'm sitting there and I'm somebody who might have come in every, once a week and saying, well, I can't afford this anymore because all my stuff has gone up too. And I'm not getting a 5% raise every year. And
right,
so now all of a sudden I'm down. Okay. So I have to lay people off. Okay. Or I have to cut prices and cut my margins. Okay. There we are.
yeah.
So the government does not do that. Okay,
They don't fire
in
people.
times of right. I mean, so it's not hard for me. I mean, to look and see that, but it's hard for people who want to get reelected to cut those things out.
Yeah.
So the
Well,
real
do
test will be Social Security, in 2035 or whenever that's supposed to, you
yeah.
know, yeah.
I guess my question is with if lowering, if everybody's talking about the Fed lowering rates in at December's meeting or something like that, if they lower rates, that means money gets cheaper. That means there's increase in purchasing, excuse me, purchasing, which
Well,
if the
that
supply
would
doesn't keep up, it inflates prices
Yeah,
even more so.
if rates are lower, and you and I can go out and buy at a cheaper loan, you'll get a loan at a cheaper rate, and I can
Yeah,
go out and spend more. That increases the economic activity in an economy, which creates inflation. But the
right.
real problem, and think about it. So I'm the Fed, and I'm Jerome Powell, and the only tool I have on inflation is to cut interest rates or raise interest rates. That's my tool. That's my lever.
Yeah.
But on the other side, my friend Janet Yellen's over there printing off treasury bills and bonds like there's no tomorrow, especially bills. Okay.
Hmm.
And bills are short term, and they're paying 5.3% or whatever now. But the long end of the scale, the 20s, the 30s, it's a lot less than that. That's why we're inverted in our curve. Why isn't she why isn't she selling long term at a cheaper rate, which would be cheaper for the government? And
Similar.
why aren't we cutting back on spending so we're not? I mean, we are in a true Ponzi scheme
Yeah.
with the way we're running. We are bonds are coming off and in maturing and at a whatever the percent is, let's say 1.5%, and then we're doing short term bonds at 5.25% that we have to pay back as a government. Okay, and those just keep rolling over and over and over, and
Hmm.
so we are paying Peter. What is it?
Pay
Pay Peter
Peter
to pay
to
Paul. To
rob
pay
Peter to
Paul.
pay Paul.
Right, rob Peter to pay Paul, and that's what we're
Yeah.
doing. We're just moving money. At what point does that finally catch up?
Well,
Well, I don't know.
it's interesting. I don't know if you've looked at the yield curve recently, but it's moved in the last month or so from a negative, say, 0.50 to last night I saw it was at a negative 0.29. And when you get that movement and movement higher in the yield curve,
The
and I'm
steepening,
looking,
yeah.
yeah, the steepening, I'm looking I'm looking at the twos versus the tens. Once you go vertical, it's historically a measure of where we are in the recessionary cycle. And this move that we've seen, especially in longer term bonds, as you pointed out, people don't want them. People are not buying them. So they're forcing the treasury to issue higher yields to become more attractive. And so if I last night I think I saw the 10-year was I think was it 4.6 or so, or it was the 30.
Well,
But they're all increasing in yield, which means the value of that bond is going down.
and why is that? Because the Japanese yen is raising to the dollar, and so they're trying to stop the Japanese yen from being crushed. Okay, so if the
Hmm.
Japanese start raising interest rates on their own bonds and they start buying those bonds of Japanese, they're already not buying our bonds. You're already seeing China dumping our bonds. Okay,
Right.
uh, so that's just going to cause more of a mess. So it's like a continuous cycle of the guy at the dam who he puts his finger here and then another hole sprouts here and he puts his finger there and another one's down and he puts his toe in there. Eventually we're going to run out of fingers and toes.
So does a 1970s, 1980s Paul Volcker moment come into play where they raise the Fed funds rates into the teens so that they can squash inflation and basically, in a way, it would slow economy down drastically and you get more of a stagflation environment. Is that the answer to it?
Well, according to the talking heads, and all the pundits, that
What about two
we're gonna
regular
have
guys?
we're
How
gonna
do
have three
what's
reg.
is that the solution?
Well, I mean, what is inflation? Okay, is inflation really going down? And let's just look at this example here. Okay, so
Oil.
CPI last month was right here. This is oil. Energy's huge. So CPI was down or flat last week or last month. Well, this is going to be June. Okay, and where's the first? Right here. So right to here. So the cost of oil and energy has gone up in June. Do you think that's not going to reflect in the CPI? Do you think that
Well,
once this
it's
comes
not
out,
because they don't include it.
well, they do. It's just not in the core. Okay, but as a consumer are seeing your gas prices go up, right?
Yeah.
So again, how am I? This will affect inflation. Okay, it will
It,
affect not the core, but it will in CPI. And if you
it,
dig
it,
into it, and as a person like two regular guys or regular people like we are, we're going to see that. Okay, so I don't care what you do. I'm not going to. Inflation is there. What do we do with gas and energy? Well, we put it in tractors to go out and harvest crops. We put it in trucks to move goods and services. Okay. We
yeah,
use it to heat our houses and move our cars. Okay. So that affects more than just the price of oil, it affects everything.
everything.
Yeah.
Yeah, and the thing is at what point does gas in Florida become over $4 a gallon? And that's just for 87 octane. what point does my heating or electric bill go up 20% or whatever? I guess at what point how do you how do you how do you squash this? How do you stop
Well,
this?
where's it going to be? Stagflation.
So okay, so let's
Once we start,
play that
because
out.
we're going to have increased inflation,
Yeah,
and we're going to have slower growth.
right.
And then on top of that, the third leg of the stool is higher unemployment, and we're starting to see that we're at 4% now. And you and I, and we've talked about this, and everyone who's regular people who look at the unemployment reports, going, "Holy crap! You think
Yeah,
we're idiots?" I
yeah,
mean, seriously, this one's like way up here, and this one, and we adjust it every month,
yeah,
and we have more part timers, than we have full timers, and let's count them, and let's not count people who aren't looking for a job now but don't have a job, and oh, by the way, the people who are not natural citizens are have more jobs than the ones that are naturalized citizens. I mean, it's just a mess. Okay, so
yeah,
that's eventually when people lose their jobs. Then what happens? Mortgages. Okay, I can't pay my mortgage anymore.
yeah,
Okay, just like the story you were telling me with the house that's for sale behind you.
yeah.
Okay, housing. When housing goes, and when unemployment goes, housing will go, and we're already going to see commercial real estate in trouble. So I mean, tell them about what the guy behind you is trying to do.
Yeah, so he put his house on the market a month ago at um I live in Florida. I live in a resort area, so the prices have inflated in the last 10 years for probably 3 or 4 times what you could have purchased a house for 10 years ago. And so he put it on the market for 825, bought another house down the road, probably a little bit more of a house, um, and threw this house on the market. And he was over at the house doing some maintenance. And I said, well, have you had anybody look at it? He goes, no, no real estate agents have walked through it. No, people looking to buy. He goes, we've dropped it to 759 now. And he's the lowest price house in the neighborhood. And so then that causes sort of a domino effect. The house next to him listed on the market about 2 months ago at about 925. He's now down around 850. He's moved his prices down. The house on the corner was in the eights. He's now in the sevens. So there's this battle. This is how fast can we get to the bottom and who's the first house to be bought,
There's your
because there's only
deflation.
one buyer, right? For all
Right.
of them. So what it's telling me is, and I also get my Redfin notices about houses in a 20-mile radius of my house. And I'm noticing I have not seen a price increase in probably over a year. What I'm seeing now is a lowering, and they're anywhere from 10 to 20%. They're coming off their pricing. And what
Well,
that's telling me is even people who are well to do are getting tight on spending money, and
and
they're stepping out.
people, a lot of people's personal wealth and value is their home and their real estate.
Yeah.
So the only thing that would keep them going, is if you're in a certain amount of stocks in the stock market and you've ridden the stock market up through either the indexes that focus on these 10 stocks, which we talked about last week.
Mm-hmm.
But if those fall, then your value of your house is down, the value of your portfolio is down, uh, and then what happens? There's
And
stagflation. There's
yeah,
your stagflation.
and I guess that's then, so they raised rates during the 70s, 80s. Volcker rolled them up into the teens, and that created stagflation. The economy basically came to a standstill. Oil prices were through the roof, the whole bit. Then what they eventually started lowering rates, which then, and probably more importantly, government regulation stepped out of the way, if I remember right, under Reagan. And to me, that is one of the biggest restrictions on what's happening in the United States with his government regulation. M&A is like dead. You're not seeing that happen. Um, Venture capital is getting tight with their money. So, like to fuel your support what you're saying about the growth in our economy starts to do this, go south, that is a part of that's being fueled by the restrictions to be able to do to build businesses, to employ, that kind of thing. And I think, unfortunately, it will slowly happen, and then all of a sudden you'll notice
Well,
it.
I mean, you can look, US factory, the ISM manufacturing PMI came out and it went down again.
Mhm.
Okay, it's in contraction. It declined to 48.5 from 48.7, which was contraction too. Okay. And then US construction spending fell 0.1% month over month. Uh, so construction spending's down too.
Yeah.
Okay, so we have this issue in housing where we don't have enough housing, but the price of rent hasn't come down. I can show you that rent is,
Yeah.
5-6% annually, and the cost of housing because of the higher interest rates and the value of the homes have gone up, have kept a lot of the younger people out. So people like me or you were like, well, I'm not going to trade off a nice lower interest rate, sell
Hmm.
my house at a discount now because the market's going down, and go try to find another house and pay a higher interest rate.
Right.
Just not doing it.
No, no, it's interesting and I think we still media focuses so much on the stock market and seven stocks.
Yep.
Hell, bring it down to three stocks. And they say that's the economy. Everybody's doing well. Your 401k is doing better. I mean, if you own the S&P 500 or a large cap growth fund, you're probably doing okay this year. Um, but when you look at the reality of what that your portfolio is doing versus what your personal economy is doing, it's going up. It's not outweighing it enough.
No.
And it's going to start, we'll see more and more 401k early withdrawals to pay the electric bill. And I
And
think
we're
you're going to
seeing
see
that
more
now.
and more of
Yeah.
that.
Yeah. And
Yeah.
credit cards are maxed out. Defaults are starting to go up, even on cars too. Car
Yeah.
loans.
Yeah.
Okay. I mean, what are car loans going to now? I don't know how, I haven't had a car loan since the 80s, but I mean, is it like, how many years can you have a car loan now?
Oh, at least 72 months.
Wow. I mean,
Yeah.
most people don't keep their car that long, as far as
Most
I
cars
know.
don't last that long.
Yeah.
you know um yeah, and I think that the thing is that that's even getting harder for people, because you could go 72 months, but as David said, or not David, Bob said on the swing trading call on Friday, they offered him financing at 7-8%. I assume he's got an incredible credit score. That's high. That's really
Yeah.
high. The average person is probably over 10% to buy, on interest, and that's why they're going longer out, further out in term, because they can get their payment down to a somewhat reasonable amount.
Right.
Um, yeah, I guess my question is, okay, this is all happening. Let's throw some sunshine or sunflowers into the mix. Where do you go to profit from this? What do you buy? What sectors perform well in environments like this?
Well, I think you look at, like a Warren Buffett, and Warren Buffett has been selling. He knows when it's high. Okay. And so do and Bezos does, and NVIDIA staff and all those people know. They know when it's high. Okay.
Hmm.
So you get out when it's high. You go into cash, you go into treasuries, you hold your cash until everything falls apart, and then you come in and buy it pennies on the dollar. That's how these guys do it. That's how Buffett does it.
Yeah.
He's patient. He can wait it out. I don't know how much longer he can wait it out. He's pretty old, but his company can wait it out. Okay. And his
Yeah.
philosophy can wait it out. And that's what they're doing. So again, I'm not looking for 10X's, but I think you diversify your portfolio. Okay. And that includes now, for me, Bitcoin, which I
Hmm.
have. Okay. Just as a hedge. People have gone to gold, if you like gold as a store of value. Okay. Uh, you can go. we've talked about the TLT, in the long-term bonds. And historically, when things get bad, the TLT, because the yields will go down, the prices will go up.
Right.
Okay. So there's that. Okay. But really, for me, it's wealth preservation. We do swing trades to go in and, you know, steal off, percentages here and there. Okay. If you can do a percent a day, that's on trading days, that's 280% a year. Okay.
That's
If you can
insane.
do that. Okay.
Yeah.
The financial guys, the institutions, the guys who hold your money in your account, they don't just sit in, one fund or whatever. They move their money around to where the value is.
Yeah.
And you can see where money flow goes. You can go to the 11 sectors of the S&P and see, technology is doing well now, and it all came out of materials or industrials, and then real estate will come in for a little bit, and then, the interest rate's going to go down. No, they're not. So real estate dumps back down. Okay, so money moves to where the value is.
Yeah. So is there
To me,
value in like utilities,
well,
dividend paying companies like Southern Company or something like that?
I think once you get to a point, right now, the risk factor on stocks, if you can get, and I was looking last week, I bought CDs at 5.5%. Okay, on average, if you're making 7% in a market which is riskier, an equities market,
Yeah.
why not go to it? Why not go to, sleep better at 5.5%, let your money sit there until we see what shakes out.
Yeah.
Or some are more, more risk adverse or tone to, and you can go out and you can chase an Nvidia, you can chase
Yeah.
Microsoft, if
I
you
think
want. That's not financial advice. I'm not personally doing that.
no. I guess I look at it and I go, if you had a core allocation and the majority of it in today's world was picking up treasury yields, CD rates of 5+%, and then you had a portion that you had more of a trend intermediate process to manage. And that's what I mean. I look at the swing trading program with Platinum, and you apply that over, say, a 3-month time frame, and use those indicators and what you teach. You can capitalize on this as long as you're willing to manage it, as you're willing to put a little work in each day. Doesn't have to be a whole lot of time, but a
Yeah.
process of saying, if the stock or position goes below these indicators, I'm out and I preserve cash, but I capitalize also when it goes up. And that way you reduce your overall basically, you reduce risk, but also increase your upside return. And it's that through that process.
Yeah, I mean, what you don't want to do is get into a situation, depending on, a 24-year-old's different than someone who's 67, okay, and retired, and may not be in the workforce pulling in, the money that they did during their lifetime. So you don't want to lose your money, okay? So
Mm-hmm.
can you say, okay, I've done really well in the market because I'm in an S&P 500 fund, and it has happened, and what if it goes down and it takes 12 years, like it has? You go back in the market and look to get back to even.
Yeah.
Do you have 12 years to lose 30% or more,
I
okay,
don't,
of the value of your portfolio? Okay, can you do that? What's that going to change your life? You have to go back to work. You have to go back to Walmart, and be a greeter,
yeah.
just to make ends meet, because your cost of eggs, your cost of car insurance, your cost of property taxes have gone up. Okay.
Where I disagree with you on the risk factor from between say a 20-year-old and a 60-year-old is different. I don't think it is. I think it's the same, because at the end of the day, if you lose money in substantial levels, like we saw during the great financial crisis or the dot-com bust, which most of us remember, it takes still a whole lot of time to get back.
Well, that's
So,
that's my point, because if I'm 67, I don't have that much time to get back.
right, even
And
if you're
if I'm
27,
67, well, if I'm 67, I probably have a lot more net worth and bigger portfolio than a 27-year-old.
right,
So I don't, and I'm at the end. I cannot afford 20 years of not having it. If I make a mistake, I can be a little more risky probably as a 27-year-old because I still have 40, 50 years to make that back at some
But
point.
here's
Okay.
one.
And I don't have that much to start with normally. Okay. So I
Right.
may have $10,000 and someone who's 67 may have a multi-million-dollar portfolio. They don't want to lose that.
Yeah. I guess my thinking is the younger you are, the more events like we would experience with these downturns is going to happen more often because of the way the system is. So losing money 20, 30% of your value at 27, knowing that the last 24 years we've had what, three, four major events, .com, housing, um, whatchamacallit,
Well, in
pandemic.
87, we had a flash crash. In 90, we had
Yeah.
the .com. In
I
2000,
mean, there are
08.
more of these events happening. So if you're 27 and you lose 20%, 30%, and you takes you 3, 4 years to get back to even again, and then you have another one, and the frequency of these things happen more and more. By the time you're 62 or 65, you're really in a pickle. And that's where
Mhm.
I look at this and I go, losing money at any stage of your life is going to get more and more, um, it's going to happen more and more often. So having the right process to prevent it, no matter your age, you're fighting the unknown, the unknown
Yep.
market events, the unknown, the policies that our governments put in place. And to me, that's where the 27-year-old needs to pay attention just as much as the 62-year-old at
Right.
how they're
And they
risking managing their money.
right. And I think they probably have more uh, day-to-day monetary pressures on them trying
Oh
to
gosh.
survive and pay the rent and pay a car payment because they don't, they might get a raise. They may work at McDonald's in California and now you have $20 an hour. Well, everything just went up, and so you're really still
Right.
behind.
Well,
Okay. Because
think
go
about
ahead.
this. If you were 65, say you're 65 years old, and you had the same financial obligations as you do in your 30s, two kids, education, all these other things that come with it. Plus, I got to put them in a house. I got to put food on the table, all this stuff. You'd be crushed. And I think that's to me where more and more the younger people have to really start paying attention and have a better investment process of managing risk. This whole buy and hold, it's gone up for 100 years. If you do the math and inflation and devaluation of our currency and this and the other, maybe not 12% annually, right? And think about it,
Right.
what you and I just pointed out in this conversation, a haircut has gone up 5.5% in over the last what,
Each
four
year,
years?
each year,
Plus each
10
year,
was.
plus
Yeah.
devaluation. You 12% ain't nothing. That's just breaking even.
Yep.
So I guess that's where I look at what
I
we're
think,
doing is
I think
really
that's where you see,
pushing management.
yeah, I think you have to have a process and you have to, if you do have a financial advisor, and there's really good ones out there,
Yeah.
make sure you talk to them and make sure you understand what's going on and why is my portfolio only at 8% or 4% when the market's at you're not even beating the index.
Yeah.
Okay, well, I'm
That
diversified is what they're going to say.
yeah.
Okay, well, you know Warren Buffett says diversification will just make you poor, and
Yeah.
so he
If you follow the rules, you'll have mediocrity. There
yeah,
you go.
Warren Buffett does not diversify. Okay, he
No.
looks for good companies that bring in cash flow to him, and that's it. And if he has to, he gets out. He
I
will
mean,
get out.
so Mark, if since you are a, big supporter of Berkshire Hathaway, do you know what the allocation to treasuries slash cash or fixed income to investment or equities is, or
I
his?
don't have that, but I know that he's got 3% of the treasuries in the United States. Berkshire Hathaway owns.
That's insane.
Yeah,
That's insane. And so if he is your idol, as not you in particular, but just people in general, I hear Warren Buffett's the greatest investor in the whole world. And I'm like, well, then why aren't you doing what he's doing?
Well, I think,
You know?
I think it's good to have people like that on your side. And I've been a long-term holder of Berkshire,
Yeah.
and I don't agree with everything they do, and I'd like to, dividends would be nice, but he's paid off. If I go back and look over time, I'm not down in Berkshire, I can tell you that.
Yeah.
Okay. Um, so if you and he's right down the road from me, so it's kind of that Midwestern. We grew up with Berkshire Hathaway and Warren Buffett, and
Yeah.
so he's kind of more he's less flamboyant than Elon Musk or Bezos or any of
Right.
these guys. But he's just a good Midwestern
Yeah.
conservative way of working at his money. But I tell you what, when the crap hits the fan and government or a bank needs bailing out, who are they going to go to? There'll
They'll
be
go
more
to
jets
him.
flying into Eppley Airfield in Omaha with suits coming out,
Yeah.
and he's going to get a good deal. He's going to go get some kind of, like he did when he bails out any company. I want 6%, annualized. I'm going to do a convertible 6%. I convert it in stock or do whatever I want, or you're going to pay me 6% until I do. Or
Yeah.
whatever percent it is.
And so if you applied that thinking and where he is at allocation wise, he's buying 3% of all US treasuries. He's holding cash. He's just waiting for a deal. Wouldn't that be a prudent way of looking at these markets today? Because you think about he went into this market probably in 09, 10, 11, and started doing those deals. He's buying on the cheap, buying value, and he cashed out. I mean, I don't remember the year he cashed out of Goldman on the warrants he bought or the deals
Mm-hmm.
he made there. He made
Right.
tons of money. And I think that's sort of the environment we're in. And yet it's hard. It's not hard to think like that. I mean, Nvidia is up 144% year to date.
Which is
What
insane.
which is insane.
Yeah.
200 and some odd percent last year, right? Yet if you look at a chart on it, it's doing this. It's rolling over. So
Mm-hmm.
wouldn't you take your profits, go buy some 30-day treasuries, get
Well,
paid, and
it
then wait for a better opportunity?
depends on your knowledge, and and there's a lot of emotion in religion and NVIDIA now. People, my rule that I teach is don't fall in love with a stock, and
Right.
people fall in love with Tesla. People fall in love with Kathy Wood and her, ARK funds. People fall in love with NVIDIA. Okay, whatever the hot stock is, people chase. Okay,
Yeah.
and that's exactly what the institutions want you to do. They want to take your money away. Okay, and if you want to chase it, we'll rug pull you, take your money away because they have more time and more money and more computers and more logarithms than we do. Uh, and that's how they get rich, by taking it away from us. Okay. Not only they take it away, we give them our money to sit there, you know, over 60 years of our life while they're taking out a commission, even though they
Yeah.
say they don't. They're getting paid on that and returning us a pittance of it. And over the time, you can see studies where, had you not had that charge on there and maybe done it yourself through some ETFs that don't charge or have low charge, you would
Mm-hmm.
save yourself $500,000 or whatever over your lifetime.
Yeah. I,
You know,
I think the point of all this is we are in a different world than we were 10 years ago, even 20 or 30 years ago. And it's changing very fast. And the way the system works is it's working against you if you just buy it and walk away. I think that's Best of US is about learning to do this differently and to look at it differently and to preserve your wealth. Because I look at what's happening and I'm just like, wow, just the divide, both politically, both individually. I look at the financial divide that's happening and I'm like, we've seen this before and it was not pretty. So let's get smart. Let's protect ourselves. So
well, and I think we do, and I think the best part of what the Platinum Channel is the community that we have and the ability to discuss, and we're bringing in more tools and things like the live Discord where you can go in and talk to people face to face, just like this.
Yeah.
and from all over the country and all over the world, and get ideas, and how are things going? What are your gas prices? We have people in there who are business owners who tell us, manufacturing is not doing so well right now, and I can tell you why. Blah blah blah. And we have people who have been in commercial real estate who say, this is the issue we have in commercial real estate. So we have our own little advisors of the group that help
Yeah.
everybody. They help me, So I learn from our group, our members, just like they learn from us. So that's our strength, I think, is what we do.
Yeah.
And plus, we're pretty accessible, you and I and Carrie, and it's almost like we're families, with some of the people that I have to do, that I deal with every day,
Yeah.
and get a cup of coffee and okay, let's turn on live and see what's going on.
Yeah. It's true.
So,
And it's becoming bigger part of what we're doing because
right.
it is discussions that, Carrie's whole mission was to bring a bunch of analysts together and debate and put ideas out on companies to invest, this, that, and the other. And more, I think what the addition of the Discord Live brings even that more so. I mean, I was on yesterday and just the conversation between four of us was like, wow, this is such a different perspective, different stock
Yeah.
ideas, different viewpoints, and it just gives you a bigger, broader view. Anyhow,
I told you that my mission and why I am a part of this is to, I was working in the business, during the financial crisis when people were getting their margin calls and being destroyed, and the the, the despair in their voices of, how am I going to tell my wife and my husband I just lost everything? I lost Junior's college fund and the house and all that because we were all in on everything on mama.com and all these things, and or
yeah,
whatever. That .com was the same way, and I don't want the retail people to go through that again. And after the financial crisis, it took a long time for retail to come back to the market. Number
yeah,
one, they lost a lot, and number two, they didn't trust the market. And
hmm,
then once the pandemic came and everything started flying, people were sitting at home, they had nothing to do. They came
yeah,
back in, and I don't want the same thing to happen to them again. So
yeah,
if we can talk them back off the cliff and and help not only on the upside but on the downside,
yeah,
that would be my mission to help.
yeah. I agree. I had two, three, four friends who went from multimillionaire status, and I'm talking eight figure levels, to bankruptcy during that whole .com bust because they didn't think it would ever end.
Right.
And when the
Different
snowball,
this time.
yeah, it was different this time. Housing never has gone down. It wasn't about housing. It was about being able to pay for a house, you know? And I feel the same way. I feel like we're this is just going to be a bigger snowball. And as Carrie pointed out to me on our team call the other day, you've been calling this for like 4 months now. And I'm like, yeah, it's just who knows when it's going to happen. But if you just look at the ingredients to the pie, it's not good for you. It's going to give you an upset stomach.
And it's not
Uh,
like we're just sitting out doing nothing. In platinum, we have swing
oh yeah,
trades and people are in and out and they're making money, and
yeah,
and they know how to get out. That's the most important thing is don't, if you're in a bad situation, get out before it becomes worse, and figure out what your downside is. If it's 2%, 3%, some people have 6%,
yeah,
what can you afford to lose and get out, and let it go and get it out of your head. Let that
yeah,
go,
yeah,
water under, move on to the next one.
yeah, exactly. Well, Mark, do you have anything else you want to hit on?
No, just everyone have a good and safe holiday season, and
Yeah.
don't blow your hands off with fireworks
Yeah, and
and
if you're
have it.
in Nebraska there, Mark is hosting the Zoo Fest, as you can see the
Yep,
sign behind him. Go check it out. A bunch of great bands over 3 days. Is that right?
3 days,
three
fourth, fifth, and
days.
sixth. Yep,
Mark hosts this or puts this together every year and has for many years. And this is a big event. This is in Lincoln. Is that correct?
Lincoln. Yep,
Yep.
downtown.
Go
Yep,
down and food and music and good time.
yep. Always
So,
a good time.
right on. Well,
Yep.
cool, Mark. We will do this again next week
Yep.
after your hopefully you recover by then.
I don't know
Uh
if I won't be able to walk. I'll be burned up and
there you'll be a
crippled.
little tanner, probably.
Yeah, maybe. Yeah, we'll see. It's been storming here. It's storming right now, so we'll
Oh,
hopefully the weather gets better.
hopefully it'll be a sunshiny weekend for you. But in the
Yep.
meantime, y'all have a good July 4th.
Yep.
Respect and love each other and say thank yous and pleases and yes sir, no sirs, and yes ma'am, no ma'ams, and be polite and enjoy this beautiful country we have, the United States of America.
Absolutely.
Peace. See
And
ya.
cut.
Awesome.